a man stands alone on a massive stage bathed in golden light. Behind him, the gleaming skyline of the financial capital. Before him, 1,000 of the most powerful people in the world economy. He is Jack Ma, English teacher turned tech billionaire, founder of Alibaba, the man who built a $500 billion empire from nothing. He begins to speak. His voice is confident, almost cocky. He mocks the banking system. He challenges the regulators. He calls their rules stupid. The crowd laughs. They applaud. They see a hero. They do not know they are watching a man sign his own death warrant. Within 72 hours, the largest IPO in human history, $34 billion, would be frozen. Within 1 week, Jack Ma would lose $3 billion of his personal fortune. Within 3 years, the combined value of his business empire would collapse by nearly $900 billion. $900 billion. That is more than the entire GDP of Sweden. More than the wealth of Elon Musk and Bill Gates combined. Wiped out, not by a war, not by a pandemic, not by a competitor, by 18 minutes of a speech. What happened in that room? What made a man who had everything believe he was untouchable? More importantly, what can the rest of us learn before we make the same mistake? This is the story of the $891 billion lesson. October 24, 2020. The air in Shanghai was crisp, carrying the electric charge of a city that never sleeps on ambition. Inside the cavernous expo center, over 1,000 of China's financial elite sat in rapt attention. On stage, a slight, animated figure in his late 50s paced back and forth, his energy a stark contrast to the stoic suits in the audience. This was Jack Ma, the former English teacher who had stared down eBay, outmaneuvered Wall Street, and built an empire from his apartment. He wasn't just a businessman. He was a force of nature. And on this day, nature was about to unleash a storm it could not control. For nearly 20 minutes, Ma spoke without notes, his voice sharp and passionate. He criticized the world of finance, calling it a stuck in the past. He mocked the regulatory establishment, suggesting that the prudent rules governing banks were strangling innovation. He positioned his creation, Ant Group, not as a financial company, but as a technology innovator that should be freed from the shackles of banking capital requirements. The crowd applauded. They saw a titan speaking truth to power. What they didn't see was the tectonic plate shifting beneath their feet. In the following days, the reaction from Beijing was not a rebuke. It was a surgical strike. Jack Ma had violated a fundamental rule of the game. He mistook his economic influence for political immunity. He believed that because he had built a platform that touched the lives of over 1 billion people, he was untouchable. He believed that the wealth he created, the jobs, the taxes, the innovation, granted him a seat at the table where he could speak as an equal. He was operating under the assumption that the rules of Western capitalism, where capital often dictates policy, applied in a system where the state dictates the boundaries of capital. This miscalculation is not unique to billionaires. It is a psychological trap that ensnares anyone who achieves significant success. Psychologists call it the illusory superiority bias, where individuals overestimate their own positive qualities and abilities, particularly relative to others. For Ma, years of fawning media profiles, global adulation, and the sheer momentum of his success created a cognitive fortress. Inside that fortress, he believed his perspective was not just valuable, but essential. He forgot that his fortress was built on land he did not own. Within 72 hours, the consequences began to materialize. The Shanghai Stock Exchange released a terse, bureaucratic statement that would become one of the most consequential paragraphs in modern financial history, citing changes in the regulatory environment. They announced the suspension of the Ant Group IPO. Let's put that in perspective. This was not a small startup struggling to find buyers. This was the largest IPO in the history of humanity. Ant Group was set to raise $34 billion, surpassing Saudi Aramco. The valuation was north of $310 billion. It was designed to be the defining financial event of the decade. When the news hit the wires, the reaction was instantaneous and brutal. In New York, Alibaba's ADRs didn't just fall. They collapsed, shedding over 8% in a single session. In Hong Kong, the bloodbath continued, wiping nearly 10% off the company's value. In a matter of hours, Jack Ma personally lost over $3 billion. But the story was never really about the money Ma lost that day. It was about the psychological whiplash. Imagine the stillness.
We need to adjust for the soil shift.
You are standing on
the latest
summit
data
of
shows
Everest,
it's stable now.
So we
planting
proceed?
a flag in
Agreed.
the cloud. The next moment, the mountain has crumbled, and you are falling, not knowing where or when you will land. This documentary is not just a biography of a fall. It is a forensic analysis of a mindset. We will dissect how Jack Ma transitioned from the ultimate disruptor to a cautionary tale. We will explore the mathematics of his loss, not just the $3 billion in a day, but the staggering $891 billion in combined market value that evaporated from his business ecosystem. We will look at the psychology of invincibility, the architecture of overreach, and the brutal mechanics of wealth destruction. Most importantly, we will look at you, because the lessons embedded in Jack Ma's silence are the same lessons that determine whether you build wealth that lasts or wealth that leaks. In the world of finance, there is no such thing as being too big to fail. There is only being too blind to see the cliff's edge. As we will see in the next section, the cliff Jack Ma stepped off was one he had been building for years. To understand why Jack Ma felt invincible, you must understand the sheer gravitational force of his success. This was not a man who had a few good years. This was a man who, for 2 decades, seemed to possess the Midas touch. He started in 1999 with $60,000, pooled from friends, in his Hangzhou apartment. He emerged from the dot-com crash not just alive, but stronger. He took on eBay, a global Goliath, and crushed it by understanding the local psychology of Chinese consumers. He built Alibaba into an e-commerce engine that processed more volume than Amazon and eBay combined. But Alibaba was just the foundation. The real monument to his genius was Ant Group. What began as a simple escrow service called Alipay evolved into a financial colossus. Ant Group didn't just move money. It created money. Through Yue Bao, it created a money market fund that became the largest in the world. Through its credit scoring and lending algorithms, it could approve a loan in seconds for a street vendor who had never stepped foot in a bank. By 2020, Ant Group was valued at more than Goldman Sachs. It processed over 17 trillion in transactions annually. It was, by any measure, the most dominant fintech company the world had ever seen. This trajectory created a feedback loop of reinforcement. Every risk Ma took paid off. Every gamble turned to gold. In behavioral psychology, this is known as success-induced blindness. When you are consistently rewarded for a behavior, the brain's dopamine system reinforces that pathway. The critical thinking centers in the prefrontal cortex become less active because the pattern recognition system is screaming, "We know what works. Do it again!" Ma began to believe that his intuition was not just good, it was prophetic. This brings us to the pivotal moment, the Bund Summit speech. Ma wasn't just giving his opinion. He was performing the role he had crafted for himself, the iconoclastic sage. He framed his critique of the financial system as a defense of the little guy. He argued that the old guard, the state-owned banks, were strangling the economy with their grandfather's rules. He positioned Ant not as a bank, but as a tech company that should be regulated lightly, if at all. In his mind, he was Robin Hood. To the regulators, he was the sheriff of Nottingham who had gotten too big for his jurisdiction. The key insight here is the nature of power. Jack Ma understood market power. He understood consumer power, but he fundamentally misunderstood sovereign power. He failed to grasp that in the architecture of the state, the financial system is not just an industry. It is the circulatory system of control. When you lend money, you create debt. When you create debt, you create dependency. When you control a system that can instantly approve credit to 1 billion people, you are not just a technology company. You are a shadow central bank. No sovereign entity, East or West, ultimately tolerates a shadow central bank it cannot control. The illusion of invincibility is often shattered not by a competitor, but by a context shift. For years, the regulatory environment was ambiguous, allowing Ant to thrive in the gray areas, but Ma's public challenge forced a clarification. The regulators had to respond, not just to Ma, but to the system he was challenging. They had to prove who was in charge. The suspension of the Ant IPO was not just a punishment. It was a demonstration, a live fire exercise to show that no matter how many zeros are in your valuation, you are still subject to the pen. When we look at the numbers, the scale of the wealth destruction is staggering. CNN performed a calculation based on peak share prices in late October 2020. The combined loss of market capitalization for Ant and Alibaba totaled some $877 billion. If we adjust for the subsequent declines and the ripple effects through the Chinese tech sector, the figure approaches $891 billion. To put that in perspective, that is more than the entire GDP of countries like Argentina or Sweden. It is wealth that vanished. Not because the products stopped working, because the perception of safety evaporated. This section is the core of our financial insight. Market capitalization is a measure of trust, not value. The factories, the code, the trucks, the data centers, they all still existed. Alipay still processed payments. Taobao still sold products. The trust that the future would be stable, that the rules wouldn't change overnight, was shattered. When trust goes away, the valuation goes with it. Jack Ma's invincibility was not destroyed by a rival. It was destroyed by the realization that the license to operate is not a permanent right. It is a revocable privilege. If this message resonates with you, if you understand that building wealth is as much about navigating the external environment as it is about internal drive, then consider subscribing. Hit the subscribe button and turn on the notification bell. This video is designed to be deeply informative, a roadmap for navigating the invisible forces that shape our financial lives. Make sure you watch until the end, because in Section 3, we will track Ma's physical disappearance, the psychological toll of watching your life's work unwind in silence. Alibaba founded 1999. Initial capital, $60,000. Ant Group valuation 2020, $310+ billion. Success-induced blindness, the dopamine trap.
Drone, maintain altitude and continue spraying pattern. Robot, proceed with soil analysis on Sector 2.
Not just value. After the storm, there is usually a clear-up. After the crash, there is usually a press conference. After the $891 billion question, there is usually an answer. But in the case of Jack Ma, there was only silence. And not just a tactical media-trained silence. It was a complete geographical and communicative disappearance. He fell off the face of the earth and in doing so, became a ghost haunting his own creation. In the weeks following the IPO suspension, Jack Ma vanished from public view. His last social media posts remained static. His signature was absent from internal memos. His face disappeared from Alibaba's headquarters in Hangzhou. Rumors began to swirl with the intensity of a hurricane. Was he under house arrest? Had he fled the country? Was he being interviewed by authorities in a location he could not leave? The vacuum of information was filled with speculation, and that speculation caused more damage to Alibaba's stock price than any earnings report ever could. This period highlights a crucial aspect of wealth psychology. The price of visibility. When you attach your identity so completely to your brand, when you are the face of the empire, your personal fate becomes a tradable commodity. Investors weren't just buying Alibaba stock. They were buying Jack Ma's vision. When Ma went silent, they weren't just losing a CEO, they were losing their compass. The uncertainty created a risk premium that devalued the stock by billions. For over a year, the silence persisted. Then, in January 2022, reports emerged that Ma had resurfaced, not in Hangzhou, not in Beijing, but in Japan. He was reportedly living in a quiet hot spring town, away from the bustle of Tokyo, keeping company with a small circle of confidants and immersing himself in cultural studies. He had become a visiting professor at Tokyo College. The disruptor had become the academic. The king of commerce had become a student of philosophy. Imagine the emotional geography of that transition, to go from commanding rooms full of global leaders to sitting in a quiet classroom, from private jets and gala dinners to quiet walks in the Japanese countryside. This is not just a change of scenery, it is a fundamental identity shift. For a man whose entire being was defined by forward motion, by building and battling, the stillness must have been deafening. This is the psychological battleground of the fallen titan, the war between the ego that wants to fight back and the survival instinct that knows the only way to win is to stay down. In March 2023, he made a brief, carefully orchestrated return to China. He visited a school in Hangzhou that he founded, the Yungu School. The photos were released strategically, Ma looking serious but relaxed, discussing education and technology. It was a signal. He wasn't hiding. He was just elsewhere. But the magic was gone. The stock barely moved. The market had learned to live without him. It had priced in his absence. This is perhaps the most painful lesson for any entrepreneur. The market will always find a new narrative. For a while, you are the story. Your drama, your rise and fall, captivates the ticker tape. But eventually, the story gets old. The algorithms take over. Traders realize that the company still has revenue, still has users. They begin to trade based on those fundamentals, ignoring the man who built it. Jack Ma went from being the protagonist to a footnote in his own biography. He didn't just lose money. He lost relevance. For a man of his ego, that is a currency no balance sheet can track. In the next section, we will analyze the mathematics of this loss. We will look at the specific fines, the forced restructuring, and how the fortune he spent a lifetime building was systematically dismantled by forces he could not see. The disappearance, Nov 2020, Yan 2022, rumors, arrest, house arrest, exile. The resurfacing, Japan 2022. The return, China 2023. Psychological toll, from protagonist to footnote. We need to talk about the numbers, not the abstract billions, but the concrete machinery of how wealth is actually taken away. It rarely happens in a single dramatic moment, like a villain seizing a treasure chest. It happens in increments, through fines, through forced dilution, through valuation resets that compound into oblivion. The dismantling of Jack Ma's empire is a masterclass in financial gravity. Let's start with the direct hits. In 2021, the State Administration for Market Regulation fined Alibaba a record $2.8 billion for anti-monopolistic practices. This was the largest antitrust fine in Chinese corporate history. It was a penalty for forcing merchants into exclusive deals, a practice that had fueled Alibaba's dominance. On its own, $2.8 billion is a staggering number, but in the context of Alibaba's market cap, it was a manageable slap. The real damage was the admission it represented. The company had to formally acknowledge that its growth strategy was, in the eyes of the state, illegal. Then came the Ant Group restructuring. This is where the real wealth destruction occurred. Regulators didn't just fine Ant, they fundamentally rewrote its business model. Ant was forced to become a financial holding company, placing it under the same capital reserve requirements as a traditional bank. This single change obliterated its valuation. Remember, Ant was valued at over $310 billion because it was a tech company with unlimited scalability. As a bank, its valuation metrics dropped by an order of magnitude. By 2023, when Ant announced a share buyback, it valued the company at just $78.5 billion, a collapse of over $230 billion in value. Jack Ma's 9.9% stake in Ant was effectively cut by 75%. The mathematics of loss extends beyond direct ownership. Let's look at Jack Ma's shareholding in Alibaba itself. In 2019, before the storm, his stake was approximately 6.2%. By the end of 2023, filings suggested his effective economic interest had fallen to around 4%. This isn't just because he sold shares, it's because of dilution and the restructuring of the partnership structure. He lost control. He lost voting power. He lost the ability to direct the ship he built. The $891 billion figure we reference is the combined peak-to-trough loss of market capitalization for Alibaba and Ant. To understand what that means for a founder, you have to imagine a different kind of math. It's not just money in the bank. It's philanthropic power. It's political influence. It's the ability to shape industries, fund universities, and back the next generation of entrepreneurs. When your net worth drops from $61.2 billion to roughly $30 billion, you lose more than commas on a page. You lose your seat at the exclusive table where the future is decided. This is the practical application for the rest of us. Whether you have $10,000 or $10 million, your wealth is always subject to the rules of the environment you operate in. We often obsess over stock picks and real estate deals, the assets we own, but we ignore the architecture that surrounds those assets. Jack Ma made a bet that the regulatory architecture would remain permissive. When it shifted, his assets shifted with it. Financial resilience isn't just about diversification in a portfolio. It's about contextual awareness. It's about understanding that the rules of the game can change. For the average investor, this means recognizing that a stock you love can be cut in half not because the company messed up, because a policy changed in a capital city thousands of miles away. It means building a margin of safety, a buffer that accounts for the possibility that the ground beneath your feet is not as solid as you think. Jack Ma's fortune wasn't stolen. It was revalued. That distinction is critical. In the next section, we will look at how he responded to this revaluation. We will examine his strategy of patience and the long game of redemption. The antitrust fine, $2.8 billion. Ant Group revaluation, 310B, 78.5B. Ma's Alibaba stake, 6.2% 2019, 4% 2023. Peak net worth, 61.2B and 30B. Lesson: wealth is subject to architecture. How does a man who lost half his fortune, his public standing, and his operational control respond? Does he rage against the machine? Does he retreat into bitterness, or does he adapt? The story of Jack Ma from 2021 to the present day is a study in the psychology of the long game. It is the story of a man learning the most. Difficult lesson for any type A personality: the art of strategic patience. If you look at the publicly available signals, a pattern emerges. In early 2023, Ma returned to China and visited the Yungu School. He spoke not about business, but about the future of education, about the need for creativity and independent thinking. It was a soft pivot. He was repositioning himself from a captain of industry to a sage of society. It was a persona that was less threatening, more palatable to the powers that be. Then in April 2023, he posted a rare message on Alibaba's internal forum. He endorsed the sweeping restructuring plan that would split Alibaba into 6 units. His words were carefully chosen. "We are back on the right track, ahai." He praised the new management. He signaled that he was not a dissident. He was a supporter of the new order. The memo was less about business strategy and more about a political statement. I accept the new reality. This is a critical psychological inflection point. For someone like Ma, who built his career by challenging the status quo, endorsing a restructuring that effectively dismantled his centralized empire must have been a bitter pill. But he swallowed it. Why? Because he understood that influence is not the same as control. He may have lost control of the operational levers, but by staying silent and supporting the transition, he retained a different kind of power, the power of legacy. In the world of wealth building, we often confuse activity with progress. We think that to win, we must be constantly moving, constantly disrupting. But there is a profound power in stillness. There is a strategic advantage in letting the dust settle, in allowing your opponents to move past you, in waiting for the environment to change again. Look at the long arc of financial history. The investors and entrepreneurs who survive multiple cycles are not always the ones who fight the hardest. They are the ones who are most adaptable. They understand that sometimes the best way to get what you want is to stop wanting it so publicly. They play the long game. For Jack Ma, the long game involves internationalization. While he stays quiet in China, his influence expands globally. He is reportedly building a new agribusiness and food technology venture that operates outside the Alibaba ecosystem. He is investing in assets that are not subject to the same regulatory scrutiny. He is slowly, quietly, rebuilding his war chest in a different theater. This holds a powerful lesson for our audience. When you face a setback, whether it's a job loss, a failed business, or a market crash, your immediate instinct is to fight, to explain, to justify. But sometimes, the most financially intelligent move is to go quiet, to conserve your capital, to protect your emotional energy, to wait for the cycle to turn. The market rewards patience. It punishes desperation. Ma's silence was not surrender. It was a repositioning. In late 2023, we saw evidence of this strategy paying off. When Alibaba's stock price fell to levels Ma considered significantly below its intrinsic value, he reportedly scrapped plans to sell $871 million worth of shares. He showed conviction when it mattered most. The man who had been silent for years used his silence to make a statement. I believe in the value, even if the market doesn't see it yet. In our final section, we will synthesize these lessons. We will move from the story of Jack Ma to the story of you. How do you build a financial life that can withstand the shocks that brought down a titan? Strategic patience, the long game. The message: we are back on the right track. Jack Ma, April 2023. The pivot: from commerce to agribusiness. The signal: $871 million sale canceled. Lesson: influence control. We began this journey with a question. How does a man lose $891 billion overnight? The answer, as we have seen, is not found in a single moment. It is found in a cascade of miscalculations, psychological biases, and immutable forces of power. Jack Ma's story is not a tragedy. It is a warning. It is a mirror held up to every entrepreneur, every investor, every person who dreams of building something significant. It forces us to ask the hard questions we usually avoid. Do we build our wealth on a foundation of borrowed assumptions? Do we confuse the current environment for the permanent environment? Do we believe deep down that we are the exception to the rules that govern everyone else? The $891 billion question is not about Jack Ma. The $891 billion question is about you. What would happen if the rug was pulled out from under your industry tomorrow? What would happen if the tax laws changed? Or the regulatory environment shifted? Or the technology you depend on became obsolete? How much of your net worth is based on trust in a system that could change its mind? The first practical application is redundancy. Jack Ma put all his energy into one basket. Even when he diversified, it was within the same ecosystem. Alibaba, Ant, logistics, cloud. They were all interconnected. When the state turned the screws on one, the pressure was felt across all. True financial resilience requires building wealth in uncorrelated areas. It requires having assets, skills, and relationships that are not all dependent on the same political or economic thesis. The second application is humility. The illusion of invincibility is the most expensive illusion you can buy. It convinces you that you don't need to listen, that you don't need to adapt, that your past success is a guarantee of future safety. History is littered with the fortunes of those who believed they were too big to fail. The market has no memory. The state has no friends. Only the humble survive. The third application is purpose. Notice how Jack Ma's public statements, when they resumed, were not about money. They were about education, about agriculture, about the future of society. When your identity is tied only to your bank account, a drawdown becomes an existential crisis. When your identity is tied to something larger, a mission, a craft, a community, you can withstand the financial storms. You can pivot. You can find new ground. As we fade out on this story, Jack Ma is not defeated. He is quieter. He is older. He is probably wiser. He is playing a different game now, one that doesn't make the front page of the financial papers every day. He is still playing. That, perhaps, is the ultimate lesson. Falling is human. Staying down is a choice. If this deep dive into the psychology and finance of success resonated with you, please take a moment to like this video. It helps others discover this content. Share it with someone who needs to hear that wealth is about more than just making money. It's about understanding the world it lives in. If you haven't already, subscribe to the channel. Hit the bell icon. We release premium, cinematic documentaries like this one regularly, exploring the hidden forces that shape our financial lives. We don't just report the news. We decode the human story behind it. Thank you for watching. Now go build something. Build it with your eyes wide open. The $891 billion question, what about you? Pillar 1, redundancy. Pillar 2, humility. Pillar 3, purpose. Falling is human. Staying down is a choice. Subscribe for more premium financial documentaries.